Hey everyone, Double P here and welcome. So, in today's trading session, I attacked the SPY and I sent it out to you. So, this is a live trade that I'm actually still in this trade. Very rare for me to be in a trade, but I'll explain the reason why in a second. So let's come down over here. First of all, let's get this out of the way. So it's my real account right here. Real-time data, stock is in real time, Amex, New York Stock Exchange, NASDAQ, all real-time feeds. Equity options, real-time, futures options, all real-time feeds. Forex, real-time, others in real-time. So you see it right there, real live account. So what's the first thing we always do? Before we trade, we draw the box. Why do we draw the box? Well, the box is volatility. The box is support and resistance. The box is supply in price action and demand in price action. The box is support and resistance. That's why we draw the box, right? So when we draw the box, we know if the stock, equity, ETF, whatever you're trading opens up inside of the box, we are going to look to do a spread or a defined risk because that's what it dictates, or we simply don't trade. This is the no-go zone. If the stock, ETF, security, whatever opens up under the box, we are looking at taking a short position. If it opens above the box, we are looking at going long, right? So that's why we draw the box, so we know what kind of position we're going to be taking. All right, so that's the box. So as you see here, when the SPY opened up, where did it open up? Barely. Just inside of the box. So what happens is we know that if it's opening up shortly right around this area right here, we're not going to go short because this could reverse and want to go long, which is what you've seen happen, right? So the same thing is if it opened up just a little bit above the box, we're not going to go long right away. We're going to wait because chances are it's going to revert right back in the box. So we got to wait. So that's exactly what I did. I waited, right? Felt it out. Looked at the trade. Saw what was going on as far as positioning. And then around 9:54, I'm on a 2-minute candle here, by the way. So let me switch this candle over here to the 1 minute, so we can take our time frame down, and it gets a little bit funky. So let's kind of straighten this out here so that you can kind of see it a little bit better. Let's shrink that down. Let's open up those candles. All right. So what do? Well, we wait, right? We're looking at taking a position here. So we wait. So roughly right around here, that's when I look at starting to take the position, right? So took the position, and we get that movement right there, right? And then all of a sudden, the SPY decides to rip. Not only does the SPY rip, well, we got to come over here and look at it because the ES mini ripped as well. So that's just the way it is. Right there on that candle. and that ripped, right? So now I find myself in a bit of a position where, what do I do now? Well, I got to hold the position, right? Got to hold, got to hold, got to hold, got to hold. The position rips to a high of 397.62, but I got to hold the position, and it hurts. So I just sat there all day and I held the position. It wasn't until we get this type of movement right here, because now the market's rolling over after being strong all day, right there, which if you are looking at the time frame, you will know exactly why the market rolled over. What do I always tell you guys? In the last hour of trade, especially the last 45 minutes, the last hour, this is when the big boys, institutions, funds, this is when they come out to play, right? So look at that movement there. This is all consolidation right here. This is mid-level consolidation, right? And then you get that movement right here. And then now you start to get the escalator to the downside. Severe sell side activity. And you can kind of see it right here. Let me bring this down so that you see it. When did it all start? Well, there you go, 5:30. Market on, close imbalance, 190 million to the sell side. Market on, close imbalance, 3.2 bill to the sell side, right? That's big boy and big girl money, right? That's smart money making its play, right? Severe sell side activity. Look at that. That's why you got to hold, right? For me to exit out of this trade and get back into this trade, I'm chewing up and I'm paying fees and commissions that I don't want to be paying, right? So I took the position and I'm holding the position, which is what you got to learn how to do too. You got to learn how to hold, right? What do the volatility bands tell you? Well, what do the volatility bands say, right? This is compression, right? Here it is right here. This is compression. When you get compression or when you get contraction, what happens is these bands eventually, they got to expand, right? It contracts, it expands. It compresses, it expands, right? And when it expands, depending on where the 20 is and the 200, if it opens up to the downside, it opens up to the upside, the position, whatever you're taking, is going to explode either to the upside or it's going to explode to the downside, right? Thus is the volatility band. So when you look at this right here, the contraction, and you see how it opened up here, this didn't open up. This just stayed flat, right? So when this stays flat like that, and then you got the bottom open, that bottom right there, that opening, that's the trap door right there. There's your trap door. And then this just expands. This just expands to the downside because these bands are ever adjusting. And this expands, this opens up the trap door to the downside. And you got a beautiful ski slope or escalator right to the downside. And you see it filtering off there. You can see it over here in the SPX. I mean, these are the only three products I'll trade. All right. And that's when you get big explosive movements, right? And there you go right there. You got contraction, you got compression, contraction, and then boom, there's your expansion, right? To the downside, all the way. And then, the MAC has got to follow. The MAC has got to follow afterwards because it's momentum, right? So it's got to follow the price action. And that turns out to be the move. And you see it right there. So let me come over here. So everyone's always wondering, well, what did you make today? This and that, blah, blah, this, blah, blah, that. No problem. I'll tell you exactly what I made today, right? You see my position right there, right? After being negative most of the day, right? Being down, and finish off the day right there. 7,200. Well, I'm not finished. That's where I am right now, presently in the position, 7,200, right? And we're up. And I got a big contract position. So I'll show you my contract position so that you see it. All right. So I'm in the money here. Hopefully I'll stay in the money. So when Monday opens up, and you can see right here, I'm in 200 contracts right there in the money. So I took a big boy position, right? Because that's what I do, right? So that being said, that's the end of the day trading recap. I stayed in this position because I knew it was going. Well, it's not like I knew the market was rolling over, but the way the analytics and the probabilities and the option chain were pricing out and the way the direction was moving, the way everything was working, I mean, the unknown factor is the marketplace. So we come over here. We look at the biggest trades going on. I mean, neither here nor there. 7 million contracts traded today. It's a lot of contracts, all right? Look at the size of these contracts. Look at the size of this put position right here, right? Look at that position. That's a big boy contract. So that's it from Double P. We keep things tight, and that's the trade. If you got stopped out today, I don't blame you for getting stopped out. It was a difficult trade to kind of sit in, but that's what I need to do because capital is being put out there. So I've got to make sure I do everything in my power and not panic and not exit out of the position and jump back in the position and exit out of the position, chewing up commission fees and all that kind of stuff, and because it's not necessary. So with that being said, always watch the news. Look at the global news so you see what's going on. You see what's happening. And that's it for Friday, December the 9th. So what I will do is I will see you in the next training session. Take care, everybody.